Folks, welcome to the Contrarian Trader. It's been a while since they did a video. It's great to be back. And I just want to really quick go over the topics that we're going to touch upon this week. Let's first take a look at the Dow Jones Industrial Average. And what I always look for as being a contrarian trader are divergences. The US dollar, and its relationship. Stocks that we're looking to trade or own and are looking to add to our positions. Eagle Dry Bulk Shipping, symbol EGLE. Michael Kors, KORS. Skull Candy, monthly chart we're going to focus on, SKUL. Community Health Systems, CYH. FUL, it's HB Fuller and Company, chemical company. Landstar Systems, symbol LSTR. The EWJ, it's the Japanese iShares. It's basically the DIA or the diamonds and the SPY, the spiders for the U.S. markets, but for Japan. EWJ weekly basis. The FXY, very, very important to our discussion on the EWJ. So let's just first do a little bit of housekeeping. Where have I been? Why haven't I done any videos lately? I get emails all the time. What's going on? The reason why I haven't done videos is because the new website's been under development. And here it is. I just rolled it out very, very recently. And there it is. Lots of changes. Tremendous amount of changes. Yes, this is a professional photograph of me. A quick story about this. I got this photo for $15 through a Sears coupon through Groupon. Love Groupon. Love it. Professional photographers wanted $200 to $250 to do this. I got it for $15, literally. So what's the new site? What are the changes about it? In the back end, user information, membership packages, stock center, top stocks. And how we get our top stocks is when people under stock center, once you log in and create a membership, you go in, you enter your stocks either hold or you're watching. And they get added to the cumulative stocks that are being watched. So in the future, I'll be adding a phase 2, which is basically a chat area, and people can break off into groups, chat room, forums, etc., and discuss these stocks. Contrarian Corner. These are the current swing trades, current investments, and the watch list. Ask Robert. That's when you drop me an email. Trade coach. What are you thinking? Second opinion on stocks that you're watching and videos, and they'll be broken down into market commentary, tutorials, and trade review. What's the big difference here? The big difference is this: is that you no longer need a credit card to sign up for the Contrarian Trader. You just sign up. No credit card required. If you like it after 7 days. That's the free trial period now, 7 days. If you don't like it, it expires. If it's for you, then you sign up and you get another 7 days free. So I had 14 days. The old pricing structure, it's still 14 days. However, the first 7 days, no credit card required, because unlike my competitors, I don't mind showing you what I could do. I have a value to provide you, so I don't need to ask for your money. I don't want to take your money if it's not for you. So that's the difference between this site and the old site. It's going to be a lot more interactive. This is phase 1. Phase 2 is when we get the chat rooms and forums opened up. More tools will be added to the back-end members area for members to use. And really, once I get the phase 2 up and running, chat room, forums, and the new tools, the trading tools, I'm going to need to raise prices. So please, if you're a current member, by the time phase 2 is rolled out, you're locked in. Your price of $29.99 is locked in, and we'll probably go to about $35 to $37. It's under conversation right now, but that's the game plan. Let's move on to what is my rant of the week. All right. Last week, you had this is from Bloomberg, and I'm going to post all these links on my website, so you're going to be able to link to these and take a look at them. I'm not going to go through this whole article, but basically, Fed slowed a gas crisis in 2007 as Yellen sounded the alarm. This just goes to show you how as much as you like to think, or we like to think, that these people are in charge of the Federal Reserve and they're on top of things, that they're not. They are not. They're usually reactive when a crisis hits, not proactive. I can tell you from reading this article, it really just casts a light on just how slow they are to react at the Federal Reserve. It's rather shocking. And what makes it a bigger concern, two points, is that we have the Federal Reserve has the gas pedal pressed down all the way. They are printing US dollars faster than lightning. What's going to happen when we have that flash of inflation that hits us? How quickly are they going to be able to react and get it under control? That's my major concern. Right now, supposedly, inflation's under control. So we'll just wait for that next crisis to hit, the bond crisis. So they didn't realize until 2007 that they had a problem on their hands. Yet back in 2005, that's how old this chart is. Back in 2005, I was plotting out this is the HGX monthly chart, the double top in the home builders. The stocks are still rallying. I was tracking them at that time. Earnings were being released, and the forward-looking guidance was being lowered. And yet the stocks were still being propelled higher. You have an overlay here of the S&P 500 in black. And here you could see in early to mid 2006, you had a double top, a lower high getting put in. Yet at the Federal Reserve, they had still yet to grasp that the interest-only loans were not going to have a substantial impact on the overall markets. I am not an MBA economist. Far from it. However, I knew back then we had a major problem on our hands, and it was going to be hitting us hard, which is why by early 2007, we were short the markets. All right, let's take a look at the Empire Manufacturing Survey, which was released on the 15th for January. The prior reading was a negative 7.3. The revision was from a negative 8.1, which is, okay, good, I guess. A positive, if you want to put a spin on it, a positive spin. Market expectation was for 2. The actual reading that came out was a negative 7.8. Why is this important? This is from the Federal Reserve. This is the six-month outlook. Continues to be bright. I'm not going to get into this report. I'm going to post it on the website along with the Bloomberg article. If you want, take your time, take a look at it over the weekend, and you can draw your own conclusions on the competency of the Federal Reserve. But again, the closing statement, 6-month outlook continues to be bright. That is not the current report. This is for the April 2010 report. Take a look at your peak here. Remember this. Now let's take a look at the January 13, last week's report, Empire Manufacturing Survey. And again, I'm going to link to this on the website so you can see it. That last chart that I showed you, this one here from 2010, marks this peak right here. Remember, 6-month outlook continues to be bright. That was here. The Empire Manufacturing Survey has never seen those highs since that report. In fact, we are nearing the lows last seen since 2010. So be careful of how much stock you put in the statements of the Federal Reserve. Let's move on to our charts. The market remains in a bullish uptrend, no doubt about it. The Dow Jones Industrial is breaking out to a multi-year high. However, the one concern that I do have, and this is not a reason to go out and short on Monday, please don't do it. You have a divergence. Overlaid here in black is your 10-year yield. The stock market and the 10-year yield generally trade in correlation. They trade together. As noted, take a look here. You had your flag formation, your pullback on the Dow Jones Industrials going back in December. What did the 10-year yield do? It pulled back with it. Earlier in November, you had a double bottom setup on the 10-year yield. It rallied along with the overall stock market. Great correlation, and it goes back for several years now. However, what you're seeing develop here right now is you have the Dow Jones Industrial Average beginning to break out to multi-year highs. However, the 10-year yield, which is a I shouldn't say forward-looking indicator, it is more of it signals negative or positive coming events quicker than does the U.S. stock market. So this sends an earlier signal as to whether or not the stock market is going to rally or is going to pull back. Right now, it's signaling to us that we might see a pullback in the overall stock market. Does that mean get short on Monday? Absolutely not. Don't do it. This is only a daily chart, subject to volatility. What you need to do, and I'll be going into it with members on tomorrow's The Week Ahead commentary, we'll be going into multi-dimensional charts, multi-time period charts. You need to take a look at the weekly, monthly, intraday charts, as well as the daily charts, and that's what we'll be doing. That comes out on Sundays. You need to be a member. So it doesn't cost you anything. If you want to see it, sign up today. The U.S. dollar. What appeared to be a breakdown in the U.S. dollar, what you saw on Friday was a reversal, a little bit of a topping tail at the 50-day moving average, but it still looks good. What I believe caused this was that you had the threat of the default of U.S. debt taken off the table, and the U.S. dollar rallied on the good news, because that's what's going to happen. They're going to kick this can down the road for another 3 months. So hopefully the Republicans are ready to go to war with Obama over a budget which we haven't had in almost 4 years now. Just completely incompetent. Both parties, completely incompetent. Stocks that we're looking to trade in the coming week. Eagle, dry bulk shipping. We traded this one, and we made a hell of a killing on it. We took profits here. We used a trailing stop loss order. We got out with a 19% and then a 40% profit. We still kept some as an investment. I like this setup, this nice little setup consolidation, good bottoming tails here. The probability of us adding to this position as a trade in the coming week is fairly high. I will be going into the Dow transports as a concern, and a pullback in the transports will keep us on hold with this trade, but I will be going into it with members tomorrow in the week ahead commentary and sending out alerts if we do add to this trade. Next stock, Michael Kors. We'll be looking to add to this position. I like the chart, good double bottom formation. Great setup here. We'll be looking to add to this position. Once again, I'll be going into all of these stocks. I don't want to keep repeating myself. All of these stocks are going to go into great detail with members tomorrow in the week ahead commentary. Again, sign up. It costs you nothing. None of my competitors can say that. It costs you nothing to check out the members area and what we have to offer. Next stock, Skullcandy, SKUL, looking really good. We have a position in Skull. Reason why we like this is for the potential for a short covering rally. Huge short interest in the stock. I like the weekly chart. Again, you need to look at your multi-time period charts before you can make a trade. So we like Skullcandy. We're nibbling on it, and I'll be sending out an alert of where we're going to set our stop loss orders and where we're going to be adding more, what I'm going to be looking for a trigger to add to that position. So we like Skullcandy. These are the stocks that came up on my screen this weekend as potential shorts. CYH, Community Health Systems. I don't really go by valuation all that much because, frankly, I'm not that smart. I'm not in their boardroom. I don't know whether a stock deserves the valuation that they have. So I don't get into it that much. What really matters to me most is the trade pattern, the price action versus volume, and the indicators. And what my first qualifier of course, is the price action. The price action is quite bullish, especially when you see a topping tail here on the candlestick on Thursday. The stock continues onward on Friday afternoon. Now, what should be a concern is this breakout above the upper band of the rising uptrend channel. The stock is going parabolic. The shorts are being squeezed. That sets up for a good opportunity for you as a new short to short into the panic of the dumb shorts who shorted back here. So we want to take advantage of that. We have an RSI of above 87. It can go higher, folks. So what we'll do tomorrow is we'll go over the current short interest, the intraday charts, and most important is the weekly and monthly charts. Is there historic resistance here or is there not? And we want to discuss where there are potential resistance levels. Next stock is HB Fuller, symbol FUL. Another one, very similar chart to CYH in that the stock is breaking out of the upper band of its rising uptrend channel. Very, very healthy stock. RSI on FUL is 85.54. So you can see these are good opportunities as the shorts are getting squeezed on these breakouts. Doesn't mean the stock is going to collapse and go to zero by any stretch of the imagination. It's just getting extended. These are trades. That's it, just simple trades. We want to get in, we want to get out. LSTR, Landstar. I think we're going to see higher highs on this. I think we're going to see similar price action as we did with CYH and LSTR by seeing a breakout above the upper band of the rising uptrend channel. This is a far more vertical move higher, and I don't think that it's going to go as far out of the upper band as the other stocks did, because those are more of an orderly, those are more orderly in their rallies. You have your flag pullbacks, rally, flag pullback, rally. This one here, you really haven't had that substantial of a pullback at all. I mean, this stock has just gone straight up since mid-December. It's huge, a huge move. Next stock, EWJ. This is a monthly chart. I've been telling my members about this for several weeks now. This is a great opportunity. This is not the time to buy it. It's the time to watch it. Monthly chart, you are seeing higher lows on the slow stochastics, a breakout above the downtrend line. You have yet to see the breakout on price action, only on the indicators. Volume is really good. Why aren't we jumping in? Two reasons. One, I would like to see a breakout above the $10 per share level, which would imply that we have a breakout above this upper band of the declining downtrend channel, or this triangle formation, whatever you want to call it. What's holding me back is one, you're seeing some topping action at $9.99. You're seeing at this resistance level here, you're seeing some sellers come in. It's stalling a bit. And the other thing that you need to worry about, and this is actually a trade we're looking to put back on, this is the FXY, the Japanese Yen Trust. It's like the UUP, the FXC, and you can see how weak it's been, and it's ripe for a rally. This is on purpose. The Japanese government is purposely doing this to increase their exports, to make their products cheaper overseas. So they're devaluing the yen, and you can see what's happening to it, just getting absolutely destroyed. However, you're going to see other central banks join in on this game, as the United States has done for several years now. And there's going to be a race to the bottom on currencies to try to get economies booming, and or at least off of, in Europe's case, off of death watch. So as the euro begins to rally to take off this extreme oversold condition, you're going to see weakness come into the EWJ. We'll be looking for a pullback on the daily chart. Once we see the yen begin to rally, it should add weakness to the EWJ. We'll add to it on that flag formation. You want to see it pull back, nice and orderly. Add to it, draw a trend line up, That way we know when to get out of the stock. If it breaks down below that trend line, we get stopped out. And then on that monthly chart, what we want to do is we want to watch for a breakout above the upper band here. And once we get that breakout on nice volume, what we want to do is we want to begin to add more aggressively, because what you're going to see is a big rally, especially on a breakout above 1116. The EWJ is just going to take off. So these are the stocks we'll be talking about tomorrow on the week ahead commentary. Again, I'll be sending out trade alerts once we execute our trades on these stocks. And that's pretty much it, folks. If you're watching this on YouTube, please, right down below, right down there, click on the subscribe button, and please leave comments, whether you like the video, you don't like the video, what can I do better. I'm receptive to feedback. If you want to debate whether or not I'm right on my calls here, please, let's debate it. Debate is good. Just be nice, especially to other posters too. That's all I request. I like healthy debate. Also, if you're watching this on my website, please leave a comment. It could be about the website. It could be, again, if you take an issue with my commentary, for it, against it, please leave some commentary. Let's get some debate going back and forth, and I look forward to working with you in the future. It's good to be back on YouTube and having videos posted, and you can expect to see many more of them in the future. Folks, enjoy the remainder of your weekend, and again, if you have any questions, please shoot me an email, robert@thecontrariantrader.com. Talk to you soon. Bye-bye.